The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Happy Thursday, August 23rd. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve, and the number to use to get through toll-free, 877-927-6648. You can catch Breakout Investing 5 days a week now on TFNN from 3 to 4 Eastern. And if you can't listen live, head over to iTunes. You can get the show as a podcast, and don't forget you can listen to all TFNN programming on your smartphone these days. Just type in tfnn.mobi in your smartphone browser, and you can listen to the stream there 24/7. Don't forget to check out Tiger TV on the homepage of tfnn.com. My show is carried live every day on Channel 1, and it is archived in Channel 13. So if you want to look at charts live right along with me on the program today, be sure to tune in to Tiger TV right on the homepage of TFNN.com. And Tiger TV is also viewable on your handheld device as well. All right, taking a look at the VIX here, working on a 4-session winning streak, still stuck underneath its 50-day moving average here, but VIX definitely getting jiggy on 4 straight gains taking shape today. The VIX right now up 5.7% to 1597. And not surprising, we see the VIX coming back to life here, fear getting elevated in the market, and you're seeing the market coming off its highs a little bit. But from my perspective, the selling has been mostly contained. I'm really not seeing anything disturbing when it comes to the action in some of these market leaders that have been performing well in the market. When I look at my own stocks in the Ultimate Growth Stocks model portfolio, still sitting on several names with gains, and not flashing anything now in the way of meaningful sell signals. So I'm not in a rush to move to cash here. But let's check and see what the indices are doing today, because we do have some selling pressure in the market. Let's check on the NASDAQ Composite first, and we'll see that it is actually trying to come back a little bit here with about 50 minutes left to go in Thursday's session. The composite now down about 12.5 points, 0.4% to 3,061. It hit an intraday low of 3,045. So not looking too bad here. Volume on the NASDAQ at last check tracking about 5% lower than what we saw yesterday. NASDAQ volume on Wednesday was very, very light, 1.43 billion shares. So we could even come in lower than that today. So even when the NASDAQ was down, trading near 30, 45, and there was never much juice behind the selling. Let's take a look at the S&P 500 here. See that the S&P 500 not rallying back like the NASDAQ is. It's still trading in the bottom half of its range today, down close to 9 points, 0.6% to 1404.78. It hit an intraday low of 1400 today. And volume on the New York Stock Exchange also, it was actually tracking higher for a little while, and now it's tracking pretty close to what we saw yesterday. And what we saw yesterday was 594 million shares. Very, very light. I mean, we're talking about light volume constantly on the NASDAQ and the New York Stock Exchange, particularly very light on the New York Stock Exchange. Light on both exchanges, but very, very light on the NYSE. So we're tracking pretty close today to what we saw yesterday on the New York Stock Exchange. Again, 594 million shares thereabouts. Taking a look at some quick headlines today. In a 17-page letter sent to the Securities and Exchange Commission on Wednesday, Citigroup hammered the NASDAQ exchange for its botched handling of the Facebook IPO. Let's check in on shares of Citigroup here today. It is down 2.2% to 29.82. Citigroup called for regulators to reject the NASDAQ's $62 million plan to compensate companies impacted by the messy IPO. Citigroup saying $62 million is just not enough. So we've got a lot of Ag stocks under pressure today. Check in on CF Industries. CF Industries recently had a nice breakout over 208.43, but that breakout is a thing of the past here. Still a difficult environment for technical breakouts. Technical breakouts are my bailiwick. I do like buying growth names that are strong performers in their industry groups, growth names that are under accumulation. Now, finding growth names that are under accumulation, that's been a tall order in recent months because the volume has been so light in the market, but never averse to buying technical breakouts. CF Industries recently broke out over 208.43. Here was the swing point over here. It tried to get going, but the past 4 sessions it's given up quite a bit of ground. It's now trading underneath that swing point, down $6.93 today, 3.2%, underperforming the market broadly today to 206.87. So CF Industries under pressure today, and not surprising, industry group peer Agrium, another fertilizer maker, down 2.5% today to 98.35. It is still holding nicely above a swing point of 92.74. You can see it broke out back in July. So Agrium, still holding above a swing point here. And Monsanto, MON, under a lot of pressure today. Shares of Monsanto down 2.4% to 85.91. Not that far, frankly, from its 50-day moving average here at 84.37. So we'll see if that ends up being a support level for shares of Monsanto. Let's take a look at BIG. Always like this ticker symbol. Big Lots under some pressure today on weak earnings. Big gap down for Big Lots, down 22%, in fact, to $30.15. That's a new 52-week low. The discounted goods retailer, the second quarter earnings declined 31% from a year ago. Sales rose 4% to $1.2 billion, but U.S. same-store sales fell 1.9%, and costs increased from a year ago. The Ohio-based retailer also lowered its full-year earnings forecast. Similarly, a tough day for shares of Guess, based here in LA. Company also reported weak earnings. Boy, does this one fall apart miserably. Down 23% today to $25.91. Guess also cut its full-year outlook today for the second time, actually, since May. Taking a look at some other stocks under pressure, shares of Baidu. Boy, Baidu looked like it, a lot of damage suffered April, May, June, July. Then it comes up off its lows in July. People think everything's all better with Baidu. And 4 days in a row down today, including a 6.5% drop today to 114.76. Deutsche Bank downgraded Baidu from buy to hold and lowered its price target from 186 all the way down to 137. According to Deutsche Bank, Baidu is losing traffic to Qihoo 360 Technologies' new search engine. Apparently, Baidu may seek legal action against China-based Qihoo. So Baidu under a lot of pressure over the past 4 trading sessions, down another 6.5% today. Checking in on crude oil, down at 99 cents. This is the October contract, down 99 cents, 1% to 96.27 a barrel. Gold up 2% to $1,672.80 an ounce. Let's check in on the GLD. And remember, I had my good friend Bob Lang on a couple days ago talking about the technical strength of gold, and it's definitely being helped by the weak dollar. The dollar is down again today, only down about 13 ticks to 81.35 is the U.S. dollar index, but weakness in the dollar certainly helping gold here. GLD working on 7 straight up days, easily reclaims its 200-day moving average, closed above the line yesterday. It is up another 0.9% today to 161.93. Looks like a pretty quickly crowded trade here. Not sure I want to chase the GLD. I find gold to be typically just a tough area to play in the market. It's I don't really play in the gold market that much. Occasionally there's a stock that might interest me. Recent shows I've been talking about shares of Royal Gold. This is not a gold miner, but it's a company that owns interests in a lot of mining properties, and you can see a good technical breakout for Royal Gold recently, and up again today, up 1.9% to 84.75. So this is a very bullish stock chart here for Royal Gold, and probably, in my view, one of the more interesting names in the gold space right now. Another reasons for gold's rally, we had weak manufacturing data out of China today. That's fueling hopes of more easing in that area of the country. HSBC said its preliminary reading of the China Manufacturing Purchasing Managers Index for August fell to a 9-month low of 47.8. That's down from July's final print of 49.3. So manufacturing data in China on the weak side today, that is also helping gold. And then, of course, we got the minutes from the Fed meeting yesterday that showed that committee members were actively discussing QE3, and there's still some talk out there that we may not see action from the Fed back on September 12th and 13th. I think they're speaking. Ben Bernanke is speaking in Jackson Hole. That's not the Fed meeting, but that's a speech before the Fed meeting on September 12th and 13th. So we'll see what he's going to talk about. But there's still some talk that the Fed still may not do anything, and that could be problematic for the market. Again, we looked at the S&P 500 earlier. Let's take a look at the weekly chart for the S&P 500 just to see where we're at here, because even though it feels like the market is under some selling pressure here, when you look at where the S&P is right now, trading around 1404, turned away. It's trying to break out here, but got turned away. And like I said about a week ago, when an index or stock starts to approach a former high and tries to break out, it could very easily form a little handle area here. And to see the S&P 500 pull back, maybe to its 10-week moving average, which is around 1377. That is only another 30 points or so from where it currently is. So you'd be looking at a pullback of maybe 2.5% from its recent high. So here people saying that the pullback is going to be sharper than that. Let's just see how the S&P, if it does eventually pull back to that 1377 support level, let's see if buyers come in and support. And frankly, it may not even get down that far, but so far, the selling pressure that I'm seeing in the market is not major cause for concern. Let's look at the daily chart for the S&P 500 again, and we did have a pretty nasty reversal in the indices earlier this week on Tuesday, and there was a little bit of juice behind that reversal too. So that was cause for concern. The Nasdaq showed very similar action. Apple, of course, reversed in heavy volume after early strength. So it was disturbing price action. There's no doubt about it. And we may look back at that day earlier this week on Tuesday and say that's what started the little market pullback here. But again, so far the selling contained, and the pullback over the past 2-3 days has been mostly orderly. So, okay, mentioned the U.S. dollar index down again. Let's check in on the UUP here, and this is the ETF that tracks the long U.S. dollar index, trading underneath its 200-day moving average here now at 22.34, down 5 cents, 0.2%. So dollar still can't get out of its own way. Heading into break number one, folks. Thanks for tuning in. As always, Ken Shreve with you. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to Breakout Investing on TFNN. Ken Shreve with you. Folks, don't forget, if you want to check out a 30-day free trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. You can click on the Newsletters tab and then Investment Newsletters after that. Learn about Ultimate Growth Stocks, my approach to the market. I basically use a combination of fundamental and technical analysis to select stocks for the model portfolio, put those buy recommendations out there, and I've got several names in the model portfolio right now, and really going to be looking to pare that down in coming days and weeks, and let the cream rise to the top in the portfolio. Typically, if you own 8 or 9 stocks, hopefully they're all 8 or 9. They're all going to be big winners. But usually, what you have is you got some big winners, you've got some decent ones, and you got some that are just kind of lagging a little bit. And what I like to do is always cut the dead weight loose in the portfolio and put money into what is working. So I've got several names in there that are working. We'll be looking to add to those under the right circumstances. And right now I'm operating under the belief that the market is in a confirmed uptrend until proven otherwise. So no reason to get overly defensive here. In Tiger TV, I put up a chart of the 10-year yield. The yield on the 10-year note, you can see bond yields have been under pressure for 5 straight sessions now. And like clockwork, again, these support levels that turn into resistance, it is uncanny how it works. But you can see how the yield on the 10-year note came right up to the 200-day moving average and was just turned away with force. So the yield on the 10-year note right now down again, right around 1.67%, and the 30-year. Take a look at the 30-year. Very similar chart. Recent resistance at the 200-day moving average, also down for 5 straight sessions here. Yield on the 30-year bond. Another big drop today. It is at about 2.78%. Economic data today. We had weekly jobless claims. They rose 4,000 last week to 372,000. That was a little hotter than expected. Not a terrible number, but a little bit more than expected. The prior week's claims data were revised slightly higher, I should say, to 368,000 from 366,000. Yesterday we had existing home sales that mostly came in line with expectations. Home builders rallied nicely on the news. Today, the Commerce Department said new home sales increased 3.6% in July to 372,000 units. That matched a 2-year high that we saw back in April. June's sales pace was revised upward to 359,000 units from a previously reported 350,000 units. In July, the median price of a new home fell 2.5% to $224,200. Let's check in on the ITB, iShares Dow Jones U.S. Home Construction Index Fund. It is still holding gains nicely here after a recent breakout over $17 a share thereabouts. ITB right now down 8 cents, about 0.5% to 17.81. So this is one of many charts in the market, strong price performers that are not flashing anything in the way of sell signals at this point. Coming up tomorrow, one piece of economic data, durable orders for July. So we'll see what that report has to say. Taking a look at some earnings reports. Let's look at the star of the day here, Hain Celestial Group. Hain Celestial Group, I mean, just a monster move for the stock. Up $11.15, 19.6% gain today for Hain Celestial to $68.06. I was checking the 12-month price target. I normally don't pay a lot of attention to price targets, but saw the 12-month price target for Hain before earnings was, I think, $56 a share. So it's a $68 stock now, and indeed a powerful breakout for Hain Celestial. Short interest in the stock, not high. It's just kind of it's not a huge short position, but there was definitely short interest. So I think there was definitely some short covering today, but again, an earnings report that turned a lot of heads. Earnings up 29% to 45 cents a share. Sales were up 25% to $365.6 million. The company announced an acquisition that they said would be pretty much immediately accretive to earnings. They acquired several brands from UK-based Premier Foods. That's going to expand their footprint in the UK. So a big move for Hain today. Let's take a look at United Natural Foods, another organic food distributor. It is kind of riding the coattails today. Not nearly as much, but still up 1.5% today to $55.48. Again, riding the coattails of Hain Celestial higher. All right, plenty more earnings reports to get to. We'll do that when we come back, folks. Stick with me. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Volume on the exchanges today still tracking a little bit lower than what we saw yesterday. Obviously, volume been very, very light in the market for quite some time now. But NASDAQ volume tracking about 5-6% below what we saw yesterday. NYSE volume pretty close, down about 1% from yesterday's level, which was very, very light at 594 million shares. So really does not have the feel of institutional selling today. The declines in the major averages fairly well contained at this point. Right now, the Dow underperforming a little bit, down 112 points to 13,060, trying to hold that 13,000 level. The S&P 500 down a little more than 10 points, 0.7% to 1403. It's obviously trying to hold 1,400 here, and the NASDAQ Composite down 17.5 points, 0.6% to 3,056. So we mentioned strong earnings from Haynes Celestial Group, and a big move for that stock. United Natural Foods also making a move. Somewhat disappointing action from the fresh market. They're not a organic food distributor. This is basically just an upscale supermarket. They've got more than 100 stores in the U.S., mostly in the southeastern, a little bit in the Midwest, middle Atlantic states. They're starting to come out here to California, but after hitting an intraday high of 62.48, the fresh market has reversed. It's now trading around 60.51, down 66 cents, a little more than 1%. But this is a stock that is coming out with earnings next week, Wednesday, August 29th, and earnings expected to be up 23% to 27 cents a share, with sales up 19% to $308 million. And I am expecting a strong quarter from the fresh market when they report next week. Elsewhere in earnings today, Hewlett Packard. We got really, an ugly report from Dell yesterday, and kind of the same thing going on here at Hewlett Packard, a company that has been kind of left behind in the dust, trying to reinvent itself here and get back to profitability. But shares of Hewlett Packard really getting hammered today, down 8% now to 1767, trading very close to its session low right now. Hewlett Packard earnings came in at $1 a share. That was 2 cents better than expected, but down 9% from a year ago. Sales were down 5% to $29.7 billion. Analysts were looking for $30.1 billion. So the sales growth was disappointing. PC sales at Hewlett Packard down 10% from a year ago to $8.62 billion. The company does plan more investment in areas including security, cloud computing, and data analysis software. But seems like Meg Whitman, who formerly ran the show at eBay, has her hands full at HPQ and will be busy trying to right this sinking ship. Let's take a look at Kayak Software here, KYAK. This is a company that came public not that long ago. It came public in July at $26 a share. It's now trading at $29.99, so it is trading above its offering price. Stock is down 2.6% today to again, $29.99. Kayak is a provider of online travel search services, operates a website called kayak.com. Nice bottom line and top line growth, but not clear to me that a new uptrend is ready to start here anytime soon. Earnings were up 90% to 19 cents a share. Sales were up 36% year over year to $76.9 million. Some of these online travel firms have been under quite a bit of pressure. Of course, Priceline, sort of the most widely known stock, big gap down here earlier this month when the company reported earnings. It's been in rally mode, but kind of just wedging higher here in light volume. And then former leader TripAdvisor, another company that got hammered hard by earnings, stuck underneath its 200-day moving average here. This is damaged goods as well. So check in on shares of Eagle Materials, EXP, good volume in Eagle Materials. Today the stock is outperforming, trading in the bottom half of its range now after hitting an intraday high of 43.55. Eagle right now up 1.9% to 42.12, showing relative price strength in the market, no question about it, and some accumulation going on in the stock today, and some also big volume in Cirrus Logic. Cirrus, very involved with the iPhone, is a main supplier to Apple. Apple accounts for the vast majority of this company's revenue, but Cirrus up big today, up 6.7% to 42.01. And unless I missed anything, I didn't see any news, but volume is very heavy in Cirrus. And I wanted to show you a weekly chart to tell you what to do with Cirrus, and right now that is absolutely nothing, because it's working on 6 straight weekly price gains here. You had a breakout from a beautiful cup with handle base here. See, the base started last year, and here was your swing point, 24.85. The stock broke out earlier this year, so it broke out over 24.85. That was a perfect buy point, and then it gave you another opportunity to get in when it cleared 31.23 in heavy volume just a few weeks ago. But now you're looking at a stock that is flat out extended, and a stock that you do not want to chase up here, okay, after Again, 6 straight weekly price gains. You just don't want to chase. You don't want to buy a stock when the train has already left the station. The last swing point, 31.23. You don't want to chase a stock when it moves more than 4 to 5% past a swing point at $42 a share. Clearly, Cirrus is very, very extended here. So let it go up, and if you want to own it, just make sure you get a healthy pullback. Maybe that happens during the next market pullback, and you could see Cirrus come down to its 10-week moving average, which right now is all the way down around $33 a share, or about 9 points below where it's trading now. So super strong stock, but you don't want to chase that puppy. Ancestry.com. Interesting what's going on with this company. There's private equity firms are interested in buying the stock, according to Bloomberg. They have some suitors, including private equity firms Permira and also TPG. And Ancestry.com, according to Bloomberg, has reportedly asked these PE firms to increase their bids for the genealogy website. ACOM reportedly has already turned down a proposal of $35 a share. So ACOM right now trading up 3.3% today to 31.14. Nice little bounce off the 50-day moving average for Ancestry.com. Take a look at shares of Regeneron. Remember, we've been following Regeneron Pharmaceuticals on this show in recent days, and good solid breakout. Stock's been kind of trading not erratically today, but it broke out, then it went down near its session low. Right now the stock is up $5, 3.6% to $143.70. Good solid breakout for Regeneron over a swing point of 141.96. This one, it's still a challenging environment out there for technical breakouts, but you do have some good volume behind the move today. You do have a bullish breakout over a swing point from a cup with handle pattern. So you're not breaking any rules by buying here. That's for sure. Regeneron Pharmaceuticals still in range here, breaking out today in heavy volume. Take a look at Cubist as well, CBST. This is another stock vying for a breakout here. Shares of Cubist Pharmaceuticals trying to break out over $44.50 a share thereabouts. It's trading right at the swing point right now, only up 8 cents today to $44.54. So having a hard time getting going, but not surprising since the markets are under some selling pressure today. Again, volume in the major averages not too heavy at all. So again, the overall day in the market, even though you have the Dow down 100 points and NASDAQ down about 0.5%, S&P 500 down about 0.7%, doesn't really feel like institutional selling out there. So too early to give up quite yet on this rally. But Cubist Pharmaceuticals definitely an interesting name here, trying to break out. And interesting thing about Cubist, not a widely known company, but earlier this month, Goldman Sachs slapped a conviction buy rating on the drug maker. So swing point here of 44.57. It is at 44.54 right now. So moving on, take a look at shares of Mellanox, MLNX. This is another one, just don't want to chase it up here. It is outperforming today, up 1.9% to 113.56. And again, it's a common pitfall when you're buying growth stocks. You see, people talking about a stock, and you see it getting a lot of media coverage. And my friend Jim Cramer was talking about Mellanox on his show just a couple of days ago on Mad Money. He likes the company, but technically, it's very extended. After a recent breakout over $67 a share, it is just not in a position to buy right here, even though fundamentals are super strong at Mellanox. Now, they're an Israeli chip designer. They supply interconnect products for computing, storage, communications applications. Again, breakout over 67.20, it never looked back. So it will consolidate at some point. It will form a base, and once it does, that'll give you another opportunity to get in here. But that is another challenge in this market right now. We've had stocks running for a little while. Headed into this week, 6 straight weekly price gains for the S&P 500. A lot of stocks moving with the market, of course, and we're at a point now where we could see a little bit of a pullback. I mentioned that earlier in the show, and if we do get one, some of these high flyers will probably, come in constructively, and we could see new entry points. Checking in on shares of LinkedIn here. LinkedIn is still having a hard time getting going. It did reclaim its 50-day moving average earlier this week. This company, of course, operates an online professional network, a very viable company here, showing great earnings and sales growth in recent quarters. Shares of LinkedIn, again, still trading above the 50-day moving average here. It is down 31 cents today, 0.3% to 105.40. And I do have a weekly chart for LinkedIn. I know a lot of growth guys still keeping an eye on this stock because it does have the look of an emerging leader. And if indeed we are in the early stages of a market uptrend here, this one could still work, but it's going to have to prove itself more, because at $105 a share, I'm not interested. If it were to take out $113 in heavy volume, I'd be much more interested, but frankly, I would probably wait for more buyers to come into this thing, and if it breaks out over 113 with volume, that's good, but it might be good just to see this thing take out 120 with conviction. And if you see, heavy volume rolling into this stock, that's a sign that institutions are in there buying. They've been pretty quiet lately in the market. But if new money comes in from the sidelines, I still think LinkedIn, could still work here. Take a look at some healthcare names sitting right at their 50-day. Moving average here. Take a look at Athena Health. Here's a pullback, and a lot of people that want to buy Athena Health. This is a strong performer in the healthcare space, and excellent fundamentals at Athena. This is a company that provides billing, collections, medical record management software for physician practices. The pullback has been in mostly light volume, but not clear to me that it's going to firm up here at the 50-day moving average. If you do see a good bounce in heavy volume, not that long ago, this was a $97 stock. Now it's $86. But let's see if big investors come in and offer support here. And if it finds support at the 50-day line, I think it would be compelling. Not clear that it's going to do that at this point. A lot of healthcare names, in fact, coming into their 50-day lines here. Here's DaVita, which operates kidney dialysis centers. Broke through the 50-day moving average yesterday, closed up near its session high. This is another one it's probably a stock that's going to form a base here. I don't know that this is going to be a situation of support at the 50-day moving average. This one still has to prove itself more. No real buying demand that I can see in shares of DaVita, despite pretty good fundamentals here. Looks like it's going to base. If it forms a base and starts to retest its prior high of 100, it will have my interest again. But right now, shares down 18 cents to 96.32. So it's going to have to pick up 3-4 more points before I would believe a breakout is taking shape here. Now, shares of Biogen, another healthcare name, coming down to its 50-day moving average. This is a little more compelling because on Tuesday, Biogen came down to its 50-day line. It's kind of firming up here. It never really gave up, and look at how it has shown respect for the 50-day moving average in the past here. So Biogen, despite a big price run already, it is showing pretty good action at the 50-day moving average. Still, though, just a lack of institutional buying in this market is a bit problematic. Okay, you see, Tuesday we had a higher volume decline in the market. Looked like one was maybe taking shape today on the New York Stock Exchange, but we hopefully will avoid distribution in the market today. It looks like we will, as volume on the New York Stock Exchange and NASDAQ continues to track a little bit lower than what we saw yesterday. So healthcare names trying to firm up at the 50-day moving average here. Not seeing a whole lot out there in terms of buying opportunities. Not surprising since the market has been running for a while. Pullback will probably be healthy here. I don't think it's going to be extended and drawn out. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. 5 minutes left to go in Thursday's session. Let's check in on the major averages here as we head into the close. Right now, the NASDAQ Composite down 19.5 points, 0.6%, to 3,054. Volume on the NASDAQ still tracking a little bit lighter than what we saw Wednesday. S&P 500. Let's check and see what the bogey is up to here. S&P 500 is trading at its session low now, down a little more than 11 points, 0.8%, to 1402, trying to hold that 1400 level. The S&P 500's 50-day moving average is all the way down at 1369, thereabouts. So some selling pressure in the S&P 500, but nothing to be alarmed at yet. Yeah, we did have a reversal in higher volume on Tuesday, which has caused for some concern. Rally back yesterday in lower volume, and volume today again looks like it's going to come in very close to what we saw yesterday on the New York Stock Exchange. Let's check in on the Dow as well. The Dow Jones Industrials pretty much at its session low here, down 119 points, 0.9% to 13,053. So we'll see if the Dow can hold that 13,000 level, which clearly is a psychological level. Dow 13,000, S&P 500 1,400. If you were to break below those levels, it probably wouldn't be good for the market. But yeah, I'm expecting the S&P 500 should be able to hold in the near term its 10-week moving average, which again is around 1377 thereabouts. So bleeding a little bit into the close here. Coming up after the close, let's take a look at earnings from Salesforce.com. Now, if Salesforce reported last week or the week before when market sentiment was a little better, we could see maybe a little better response here. I'm not sure if the numbers are going to be good enough at Salesforce. This is a company that has delivered 30% plus top-line growth for several quarters in a row. Definitely strong demand for the company's customer relationship management software. It's a big cloud play here, but Salesforce down 1.5% to 146.39 ahead of the results. It has been in rally mode for the entire month of August, but the estimate is for 39 cents a share at Salesforce. That should be up 30% from a year ago. Sales up 33% to $728 million. Let's see if Chairman or CEO Mark Benioff can pull a rabbit out of his hat here. I know some people expecting strong numbers from Salesforce. We'll see if the company can deliver. Also, after the close, let's check in on earnings from Mentor Graphics, a stock that has been rallying nicely ahead of the results, and it is outperforming again today, up 2.1% to 1624. So Mentor Graphics in rally mode ahead of its earnings after the close, and then tomorrow, before the open, Madison Square Garden, which another stock that has been performing quite well since the end of July, has been rallying nicely, and not surprisingly, because Madison Square Garden is expected to deliver a pretty strong quarter of earnings and sales growth, with earnings up 100% from a year ago to 22 cents a share, sales up 19% to $277 million. So that's earnings from Madison Square Garden before the open tomorrow. All right, well, that's going to do it for this edition of Breakout Investing. I will be back with you tomorrow, Friday, from 3 to 4 Eastern. Coming up next, the Tom O'Brien Show. As always, right after Breakout Investing, Tom will be on from 4 to 6 Eastern. And folks, don't forget, 30-day free trial of Ultimate Growth Stocks right on the homepage of TFNN.com. You can get that right on the homepage. Check out 30 days free. I think you'll like it. Have a great afternoon, everyone.